Hey everyone, welcome back to Talk Tickers. We're diving deep today into Lexin FinTech's Q3 2024 earnings call.
Oh yeah, exciting stuff.
Yeah, so for anyone who maybe needs a refresher, Lexin FinTech is a Chinese company and they're really focused on consumer loans.
Right, kind of a blend of lending and all the cool tech stuff that's happening.
Exactly like a fintech.
Yeah, fintech, exactly.
So their earnings call just came out on November 25th, and we are here to break down everything that happened, all the interesting points, and what it all means for you.
I think it's going to be interesting for our listeners. I think they're going to learn a lot about.
For sure, for sure. So just to kind of give everyone a roadmap of where we're headed today, we're going to be talking about Lexin FinTech's strategic shift that they've been working on towards a more prudent and kind of steady operational strategy that's really focused on risk management.
Yeah, they've been talking about this for a couple quarters now, so it's good to see them really putting this into practice.
Absolutely. And we're going to see if it's paying off by looking at their financial performance. We're going to get into their revenue, how that's holding steady, their net profit, which has had a pretty big jump, actually, a 36.7% quarter-over-quarter increase.
Wow, yeah, that caught my eye too.
Yeah. So we'll dig into what's driving that, and then we'll also look at some other interesting details, like record low funding costs for them, a really impressive reduction in customer acquisition costs, and also they're launching a new platform that we'll get into later called the Intelligent Credit Platform.
Yeah, this is a really interesting development. A lot of potential there.
Lots to unpack, for sure. So with that, maybe we should just jump right into it.
Let's do it.
Okay, so let's start with this risk management thing, because that seems to be like the core of their new strategy.
Yeah.
Do you walk us through what they're doing and how it's working out for them?
Yeah, absolutely. So as you mentioned, they're really focusing on improving the quality of their loans. And that means being more selective with who they lend to, especially with new customers. You know, they're really scrutinizing those coming through online advertising and stuff like that. But they're also doing something really clever with their existing customer base.
Okay, so instead of just focusing on bringing in new people, they're also working with who they already have.
Exactly. They've got this massive pool of over 200 million registered users. Think about that. That's a lot of people.
That is a lot of people, yeah.
And they've started reactivating these dormant accounts. So these are customers who maybe haven't used their services for a while.
So rather than spending tons of money on advertising to attract new borrowers, they're going back to the well, so to speak.
Yeah, exactly. And it's proving to be way more cost effective. You know, acquiring these reactivated customers is so much cheaper than attracting new ones through advertising.
Okay, that makes sense.
Plus, and this is really interesting, these reactivated customers are actually turning out to have better risk profiles than new acquisitions.
Oh, wow. So it's a win-win.
Exactly. Lower cost, lower risk. It's a smart move.
For sure. So it sounds like their risk management strategy goes beyond just who they're lending to. They're also kind of like revamping some of their loan products.
Absolutely. They've been really fine-tuning their offerings, really focusing on two key segments. You've got small and micro businesses, and then what they call their super prime salary workers, so the top tier folks.
Interesting.
Yeah, so for small businesses, they've got this working capital loan product that's been really successful. And then for their prime borrowers, they've adjusted their Lexin card product to encourage more borrowing while, still keeping that risk in check.
So it's like they're not just improving the quality of the loans.
Yeah.
They're also kind of customizing these products to really make sure that they're profitable.
Exactly. It's like a 1-2 punch.
A 2 punch.
Yeah.
I like it. And then on top of that, they're working to optimize their loan early payout ratios.
Yes, very important.
Yeah. So can you break down what that is and why that's so crucial to their strategy?
Yeah, so essentially they're encouraging people to pay back their loans early. And that might sound counterintuitive at first. You'd think they want people to hold on to those loans longer so they can collect more interest.
Right.
But it's actually really smart because it helps them manage their cash flow more effectively. It keeps the money flowing. It ensures a steady stream of revenue.
It's like keeping the engine running.
Exactly. Keep the wheels turning.
Okay, so we've got the managing risk, like pros, tweaking their products for maximum impact, encouraging those early loan repayments. No wonder their profitability is looking so good.
Right, and that's what we see in the numbers. But there's one more thing I want to highlight because I think this is where things get really interesting.
Okay, lay it on me.
The Intelligent Credit Platform, the ICP, this is a big deal.
Okay, I saw that mentioned in the report, but I wasn't really sure what it was all about. So can you break that down for us?
Yeah, absolutely. So essentially what they're doing is stepping into a capital light profit sharing model with this platform, and it's kind of like a matchmaking service for borrowers and lenders.
Matchmaking. Okay, you've got my attention now.
All right, so think about it this way. Lexin FinTech has all this data on their customers. They know their spending habits, their credit history, their risk profiles, right?
Yeah, they've got all that juicy data.
Exactly. And they use all this data to identify potential borrowers. So instead of lending the money directly themselves, they connect these borrowers with financial institutions that have a matching appetite for risk.
So they're not actually giving out the loans themselves. They're just connecting the dots.
Exactly. They're like a financial matchmaker.
I love that analogy, the financial matchmaker.
Bringing borrowers and lenders together and taking a fee for the service.
And the best part is they don't even have to risk their own capital on these loans.
Exactly. It's a brilliant way to leverage their data and tech to generate revenue without taking on those traditional lending risks.
So it's lower risk, but still potentially very profitable.
Right. And it's still early days for the ICP, but it has the potential to really shake things up in the lending market. It could disrupt traditional models in a big way.
That's super interesting. So it sounds like they're kind of becoming less of a traditional lender and more of a tech-powered financial platform.
Absolutely. They're thinking ahead. They're adapting to the evolving landscape of fintech.
Yeah, it's really fascinating to see how they're evolving. So we've talked about this risk management, this new platform. It's time to dig into the numbers, right?
Yeah, let's see how this is all playing out in their financials.
Let's do it.
Yeah, it really is a fascinating shift. Traditionally, a lot of fintech companies were all about that rapid growth, almost at any cost.
Right, like move fast and break things.
Exactly like a race to see who could disrupt the market fastest. But Lexin FinTech seems to be taking a different approach.
Right, like
Yeah.
they're saying, hold on a second.
Yeah.
Let's build something sustainable here.
Yeah, exactly.
They're proving that you can be both profitable and innovative in the fintech world, which is a powerful message.
Absolutely. And I think their Q3 results really suggest that this more balanced approach might be the key to long-term success.
I'm curious how this might influence other players in the Chinese fintech market.
Yeah.
Will we see more companies shifting to this more prudent strategy, or is Lexin FinTech an outlier?
That's a great question. It's hard to say for sure, but I think Lexin FinTech's performance is definitely turning heads. If they keep delivering strong results, they could set a new standard for the industry.
Right, like a new trend emerging.
Yeah,
Less move fast and break things, more build a solid foundation and thrive.
I like that. Yeah, that's a great way to put it. It's a more mature approach to fintech.
For sure, for
Okay.
sure. So let's say we're talking to a potential investor who's interested in Lexin FinTech. What are the key takeaways we want them to walk away with?
Okay, good question.
Yeah.
Well, first and foremost, I'd highlight that successful strategic shift we've been discussing.
Right.
They've shown that focusing on risk management and profitability can lead to impressive results even in a challenging market.
All right, it's not just about growth at any cost. It's about sustainable growth.
Exactly. And then there's their innovative, intelligent credit platform, the ICP.
Yeah.
Potentially a real game changer in the lending market, allowing them to generate revenue without taking on those traditional credit risks.
It's like they're building a moat around their business model.
Exactly. And of course, you can't ignore their strong financial performance this quarter, the surge in net profit, the record low funding costs, very positive indicators.
You're checking all the right boxes.
They are, but we should also be fair and mention the risks,
Right, of course.
We need to be upfront about the uncertainties surrounding the Chinese economy, plus competition in the fintech space is fierce.
Oh, yeah.
There's no guarantee Lexin FinTech can maintain this momentum forever.
Right. It's a marathon, not a sprint.
They're off to a great start.
Feels
There's
like-
a long road ahead. Yeah, but overall, though, I think Lexin FinTech has a ton of potential. They're well positioned to benefit from the growth of the Chinese consumer finance market, and this new approach is giving them a competitive edge.
Okay, so let's put on our prediction hats for a second.
All right.
What do you think the next year holds for Lexin FinTech?
Well, if they can continue executing their strategy effectively, I think we could see even more improvement in their asset quality, continued growth in their net profit, and potentially even further expansion of the ICP.
More of the same, but even better.
Yeah, exactly. Why not?
I like the sound of that.
Yeah.
What about their stock price? Any thoughts on where that might be headed?
Now that's a question I'm not going to touch. Predicting stock prices is a fool's game.
Oh, come on.
Too many variables.
But we can look at the signs, right?
Mm.
Their stock is up today after the earnings release, so that's got to be a good sign, right?
Sure, the market seems to like what it's hearing, but, short-term stock movements don't always reflect a company's long-term value.
True enough, true enough. But if their fundamentals continue to improve, wouldn't that logically push the stock price higher over the long run?
It's a reasonable assumption, but again, no guarantees in the stock market. It's all about weighing the risks and rewards.
Okay, fair enough. Fair enough. So let's shift gears a bit.
Okay.
They mentioned in the call that their intelligent credit platform operates under a light asset profit sharing model.
Yes.
Can you break down what that means for us?
Yeah, absolutely. It's a crucial part of their new strategy, basically. They're not acting like a traditional lender who holds loans on their balance sheet. Instead, they're more like a platform or marketplace that connects borrowers and lenders.
So they're not risking their own capital, but they're still making money
Yeah.
by facilitating these loans.
You got it. They generate revenue through fees and profit-sharing agreements with the lenders.
Okay.
It's a clever way to reduce risk while still capitalizing on the growth of the lending market.
So it's lower risk, but still potentially very profitable.
Right. And this model has some real advantages for starters. It lets them scale their business faster without needing to raise as much capital.
Because they don't have to tie up funds in loans.
Exactly. Less overhead, more flexibility. And the second big advantage is that it reduces their exposure to credit risk. You know, if a borrower defaults, it's the lender who takes the hit, not Lexin FinTech.
So they're passing the risk on to other institutions.
In a way, yes, but they're still very much involved in the process. You know, they're using their data and tech to vet borrowers, match them with the right lenders, make sure the platform runs smoothly.
So it's not just hands off, they're still actively managing the risk.
Exactly.
Okay, I see. So what I'm wondering is, could this model disrupt the traditional lending industry? Is this the future of lending?
That's a big question. If this model proves successful and gains wider adoption, it could definitely shake things up. We might see a shift away from traditional banks towards more platform-based lending models.
Like the sharing economy, but for finance.
Exactly. It's about connecting borrowers and lenders, directly cutting out the middleman, making the process more efficient and transparent.
And potentially more profitable for companies like Lexin FinTech.
There's a good chance of that.
Yeah.
But keep in mind, this is still a relatively new model. There's still many unknowns. We'll have to wait and see how it evolves.
Right.
Yeah.
Okay. So there's one more crucial element I think we need to explore here.
Okay, what's that?
Their commitment to technology and R&D.
Yes.
They mentioned investing a significant amount in this area this quarter.
Right, and I think that's really important. It shows they're not content with just their current success. They're looking ahead. They're constantly searching for ways to innovate and improve.
Yeah, they're not just a lender. They're a tech company at heart.
Exactly.
Like they're building this whole digital ecosystem for finance. And their R&D spending should that they're committed to staying ahead of the curve in this fast-paced world of fintech.
Absolutely, and it seems like artificial intelligence is at the core of their strategy.
Oh, yeah, for sure.
They're using it to refine their risk management, their customer segmentation, their intelligent credit platform.
It's like they're building a financial brain.
Exactly. AI is becoming increasingly crucial in fintech. You know, it enables companies like Lexin FinTech to operate more efficiently and provide more personalized services to their customers.
It's not just about human intelligence anymore. It's about human expertise combined with the power of AI.
Right, and Lexin FinTech is proving that that's a potent combination. Their results this quarter are a testament to the power of tech and innovation in finance.
So can we get specific, like, give me an example of how they're using technology to improve their operations?
Sure.
I remember them mentioning something called an anomaly attribution system in the earnings call.
Yes.
What is that exactly?
It's a fascinating system. Essentially, it uses AI to monitor their business in real time, you know, detecting any unusual activity or deviations from normal patterns.
Like a digital watchdog alerting them if something seems off.
Exactly. And it's incredibly fast. They said it can identify anomalies in just a few hours, sometimes even minutes. Wow.
Much faster than manual monitoring.
That's amazing. But what happens when the system detects an anomaly? What do they do with that information?
That's where the attribution part comes. And the system not only identifies the problem, but it also tries to figure out what's causing it. It's like a digital detective,
Oh, wow.
helping them understand why something is happening.
So it's not just an alarm, it also helps them solve the problem.
Exactly. And that's crucial for managing risk and optimizing operations. By quickly identifying and addressing anomalies, they can prevent small hiccups from becoming big headaches.
It's like having a team of virtual analysts working around the clock to keep everything running smoothly.
Yeah, that's a good way to put it.
So they're using AI to monitor their business spot problems and figure out solutions. What other technological innovations are they implementing?
Well, they also mentioned significant improvements to the accuracy of their AI model in post-loan management.
Okay.
So they're using AI to analyze borrowers' repayment behavior and make smarter decisions about collections and loan modifications. So they're not just using AI for loan approvals. They're applying it across the entire loan lifecycle.
You got it. They're integrating AI into every corner of their business to boost efficiency, effectiveness, and profitability.
It's a pretty impressive setup.
It is.
So let's switch gears back to their financial performance for a second.
Okay.
I noticed a few key metrics in the report I wanted to get your take on.
Sure. Which one's caught your eye?
Well, they said their take rate reached a record high this quarter.
Okay.
Can you remind our listeners what that means and why it's so important?
Yeah, so the take rate is essentially a measure of profitability in the lending business. It represents the percentage of revenue they generate from each loan they facilitate.
So a higher take rate equals more profits.
Exactly, and their record high take rate this quarter suggests they're doing a fantastic job of controlling their costs and pricing their loans strategically.
That's music to investors' ears.
It is.
What factors are driving this increase in their take rate?
Well, they pointed to a few key drivers. First, the ongoing improvement in the risk level of new loans.
Okay.
They're becoming more selective about who they lend to so they can charge higher interest rates while keeping defaults low.
The classic risk-reward trade-off, lower risk, means they can command a higher premium.
Exactly. Second, their record low funding costs are helping.
Makes sense.
They're attracting more funding from institutions at lower rates, so they can offer more competitive loan terms to borrowers while maintaining a healthy profit margin.
So they're winning on both ends, reducing costs and increasing revenue.
Precisely. And they also mentioned they're continually optimizing their loan early payout ratios, encouraging early repayments.
Right.
This improves cash flow, speeds up revenue generation. It all adds up to a very positive picture for their profitability.
Okay, so the take rate is up, their funding costs are down, they're optimizing payouts. Anything else contributing to their strong performance?
Well, we can't forget about their improved asset quality.
Yeah.
They've been really focused on reducing delinquencies and boosting the health of their loan portfolio.
Right. They said their day one delinquency rate went down by 9% compared to last quarter.
Exactly. This is a vital sign of their risk management success. As they make more high-quality loans, their exposure to potential losses goes down.
They're not just making more money, they're making it more safely.
Precisely. And this is reflected in their lower provision costs, which is the money they set aside to cover potential loan losses.
Okay, so they're strengthening their bottom line while also boosting their top line.
Right, and that's what you want to see, a sign of a sustainable and profitable business.
So they're managing risk-improving asset quality and generating record profits. Is there anything not to like about this company?
Well, remember those risks we talked about earlier, especially when you're talking about a company in a fast-moving market like Chinese FinTech? There are always risks.
Fair enough. But looking at their performance this quarter, they seem to be doing a lot of things right.
Definitely a company to watch. Their new focus on profitability and risk management is paying off. And that intelligent credit platform has the potential to shake up the lending market. It'll be fascinating to see how they continue to evolve and what kind of impact they have on the broader fintech landscape.
Absolutely. But before we wrap up this deep dive, I want to circle back to something we talked about earlier, their decision to increase their dividend payout ratio.
Ah, yes. That's a big move.
Yeah.
It shows they're confident in their future earnings.
It's like they're saying, hey, investors, we're making bank and we want to share the wealth.
Exactly. A move like that will attract income-seeking investors, but what does it tell us about their long-term plans?
I think it suggests they're moving away from a pure growth-focused strategy to a more balanced approach that prioritizes both growth and shareholder returns.
So they're not just trying to be the biggest fintech company, they're trying to be the most profitable and shareholder-friendly as well.
Exactly. It's a message that's likely to appeal to a lot of investors.
For-
Okay, so we've covered a lot of ground today. We've talked about their impressive financial performance, their shift towards profitability and risk management, the innovative intelligent credit platform, and their commitment to technology and R&D.
It's been a true deep dive.
It has been, and we've only scratched the surface of all the cool things happening in the Chinese fintech space.
There's always more to explore.
Always more to explore. But before we move on, what stands out to you as the most important takeaway from this deep dive?
For me, it's how powerful strategic adaptation can be. Lexin FinTech realized the old model wasn't sustainable, and they made some bold changes to prioritize profitability and risk management.
They were willing to adapt and evolve, and it's setting them apart. Their success is a testament to their flexibility.
Couldn't agree more.
Okay, so before we sign off, I want to leave our listeners with one final thought-provoking question to ponder.
I love a good brain teaser. Hit me.
Will Lexin FinTech's success inspire a wave of responsible and profitable fintech companies, Or will they remain an outlier in an industry still obsessed with growth above all else?
Ooh, that's a good one. Yeah, that's the million-dollar question. It really goes beyond just Lexin FinTech. It speaks to a potential shift in the entire tech landscape, a move towards sustainability and building long-term value.
Yeah, for years, it felt like the only thing that mattered was growth, spin, dominate the market, and figure out the profits later.
Right, growth at all costs.
Exactly. But maybe we're finally starting to see that change.
Yeah, and what's interesting is that Lexin FinTech isn't abandoning growth entirely. They're still expanding, but in a more strategic and calculated way.
Right. Like they found the sweet spot, aggressive growth balanced with responsible management.
Mm.
They're pushing forward, but they're being smart about it.
Exactly. And their emphasis on risk management is a big part of this. They understand that sustainable growth requires a solid foundation of risk assessment and mitigation.
Like they're not just building a flashy skyscraper. They're making sure it has a foundation strong enough to weather any storm.
Couldn't have said it better myself. It's a lesson a lot of other fintech companies could benefit from in the rush to disrupt and innovate. Sometimes those fundamental risk management principles get overlooked.
Right. It's like they're saying innovation is great, but let's not forget about the basics.
Exactly. And investors are taking notice. Their strong financial performance this quarter is a clear sign that their approach is working.
It is for sure.
Yeah.
So we've covered a lot of ground today about, their strategy, their financials, their tech, their vision for the future. But what does it all mean for the average person listening to this? What are the key takeaways?
That's a great question. I think one big takeaway is the importance of financial literacy. Whether you're a seasoned investor or just starting out, it's crucial to understand how companies operate and what to look for.
Knowledge is power, especially when it comes to your money.
Absolutely. Another big takeaway is the transformative power of technology in finance. Lexin FinTech is a perfect example of how companies are using AI, data analytics, and other cutting-edge tech to completely change the way we manage our finances and access financial services.
It's like finance is finally catching up with the digital age.
Exactly. And this trend is only going to accelerate in the years to come.
For sure. So what would you say is the third big takeaway for our listeners?
I'd say it's the importance of adaptability and innovation. Lexin FinTech saw that the old way of doing things in fintech wasn't working, and they were willing to make big changes and embrace new technologies.
They didn't just sit back and accept the status quo. They adapted, evolved, and pushed boundaries.
That's a great point. Being adaptable, embracing change, and constantly seeking new and innovative approaches. It's crucial for success in any field, especially in today's rapidly changing world.
Couldn't agree more. Yeah. All right, so before we wrap up, we need to have our standard "This is not financial advice" chat.
Oh, yes, of course.
Just a reminder to everyone that we are not financial advisors, and nothing we've discussed today should be considered investment advice.
Absolutely. Always do your own research, talk to a qualified financial professional, and understand the risks before making any investment decisions.
Okay, disclaimer out of the way. Let's have some fun with a hypothetical trade idea.
All right, I like it.
What if Lexin FinTech's intelligent credit platform becomes so wildly successful that it catches the eye of a major U.S. tech giant?
Okay.
Could we see a bidding war erupt for this innovative platform?
Now, that's an interesting thought. If their platform keeps gaining momentum and shows its disruptive potential, it's not hard to imagine a company like Amazon or Google seeing it as a valuable acquisition target.
Just picture the headlines: Amazon acquires Chinese fintech startup in blockbuster deal.
It would definitely be a game changer, and it would be a huge validation of Lexin FinTech's strategy and the power of their technology.
But of course, this is all purely hypothetical. We're just exploring the possibilities here.
Exactly. The future is always uncertain, and there are countless factors that could affect Lexin FinTech's journey. But their story so far is a compelling example of innovation, adaptability, and a commitment to building a sustainable business.
Absolutely. Well, that brings us to the end of our deep dive into Lexin FinTech's Q3 2024 earnings call. We hope you found it informative and engaging. Until next time, keep learning, keep exploring, and keep asking those tough questions.